Okay, let's dive right in. We're talking about, well, a giant in the financial world, a name you hear constantly, right? BlackRock.
It's almost hard to wrap your head around the scale, honestly.
Totally. End of 2024, they were managing something like $11.6 trillion. Trillion.
Yeah, that number, it's staggering. It puts into perspective just how influential they are in the global economy, bigger than the GDP of most countries.
Exactly. So today, we're going to try and unpack this. How did BlackRock get so huge? And we also need to talk about the conspiracy theories. There's a lot swirling around.
And it's understandable, you know. With that kind of power comes a lot of questions, sometimes suspicion.
Right. So you might have heard some of these. Maybe you wondered yourself, what's fact, what's fiction?
Our goal here is to, well, bring some clarity. We'll look at how they grew step by step, and then we'll look at these theories, where they come from, what they actually claim. We've got plenty of material to sort through.
Okay, let's do it. Back to the start. 1988. 8 founders. Larry Fink, Robert Capito, Susan Wagner. They all came from First Boston, yeah.
That's right. And the core idea, the real founding principle, was sophisticated risk management for big institutional clients.
And Fink had some personal experience driving that, didn't he?
He did. Famously, he had that significant loss at First Boston, reportedly around $90 million, miscalculating interest rates.
Wow.
So that experience really hammered home the need for rigorous risk analysis. It became central to the new firm's DNA.
So that painful lesson basically becomes the foundation for trillions.
Yeah.
Kind of ironic. And they weren't called BlackRock at first?
No, initially they got seed money, about $5 million, from the Blackstone Group. Blackstone took a 50% stake.
Hence the original name.
Blackstone Financial Management. Yep. And they hit the ground running. Profitable in months, $2.7 billion under management by '89.
That's incredibly fast growth. You mentioned risk management. Was there a specific tool or tech involved early on?
Yes, absolutely. That's where Aladdin comes in.
Aladdin. Sounds a bit magical.
Well, it stands for Asset, Liability, Debt, and Derivative Investment Network. Basically, it was their proprietary software for super detailed risk analysis.
So it let them see potential downsides way better than others.
Exactly. It gave them a huge analytical edge, let them make much smarter calls for their clients. That really attracted those big institutional investors.
A tech advantage right from the start.
Yeah.
Okay, so they're Blackstone Financial Management, growing fast, Aladdin's humming along. Why the split from Blackstone?
By 1994, they'd grown a lot, wanted more independence. So they separated from Blackstone, became BlackRock officially.
And their assets kept climbing even then.
Oh, yeah. By 94, they were already at $53 billion AUM. This separation really let them carve out their own path.
Then came the IPO, right? 1999. Going public must have been a game changer.
Definitely. Listing on the NYSE at $14 a share brought in serious capital for expansion. They were managing about $165 billion by then.
So the IPO basically validated their model and fueled the next stage.
Absolutely. So those early years, you see the key ingredients. That deep focus on risk, the tech advantage with Aladdin, and then the capital boost from the IPO. A really strong foundation.
Okay, strong foundation check. But going from, 165 billion to over 11 trillion, that's a massive leap. Acquisitions had to be key.
Oh, hugely important. The first really big one was Merrill Lynch Investment Management, MLIM, back in 2006.
Right, MLIM. How did that change things?
Well, it dramatically expanded their reach. Suddenly, they weren't just serving institutions. They were big in the retail market, too, serving individual investors.
So mutual funds, that kind of thing.
Exactly. MLIM brought a huge mutual fund portfolio, which diversified BlackRock beyond just fixed income. Plus, it significantly boosted their international presence.
So more products, more types of clients, bigger global footprint. What was the scale of that deal?
It was valued around $9 billion. Merrill Lynch actually took just under a 50% stake in the combined company.
And that pushed them over a significant milestone.
It did. That merger took BlackRock over the $1 trillion AUM mark, really cemented them as a major global player across the board.
1 trillion. Still a mind-boggling number. But they didn't stop there. 2009, Barclays Global Investors, BGI, that included iShares, right? That feels even bigger.
That was arguably the game changer. Acquiring BGI for $13.5 billion in cash and stock instantly made BlackRock the world's largest asset manager. Overnight, they jumped to over $3.3 trillion AUM.
Wow. And iShares. That was the ETF business.
Precisely. BGI was a leader in ETFs, so acquiring iShares made BlackRock the dominant player in that space, just as passive investing in ETFs were really starting to explode in popularity.
Perfect timing then. ETFs have become so central to how people invest now.
Exactly. It positioned them perfectly for that massive trend. And Barclays got a big piece of BlackRock, too, as part of the deal, nearly 20%.
So those two deals, MLIM and BGI, were just transformative. One broadened their reach, the other gave them massive scale and dominance in ETFs.
Couldn't put it better myself. Absolutely crucial steps.
Okay, M&A is clear. Let's go back to Aladdin for a second. You said it was key early on. Did it just stay an internal tool?
No, that's another fascinating part of the story. Aladdin evolved into this incredibly comprehensive platform, risk analysis, portfolio management, trading, operations, all integrated.
A single system for everything.
Pretty much. But the really interesting thing is they started offering Aladdin as a service to other financial institutions.
Wait, so other big players like competitors or pension funds use BlackRock's system?
Exactly. Other asset managers, banks, insurers, pension funds, they pay BlackRock fees to use Aladdin to manage their own assets.
That's incredible. So they're not just managing money, they're selling the tools to manage money.
It's a really powerful position. It generates significant revenue, obviously, but it also embeds BlackRock incredibly deeply into the whole financial ecosystem. Clients say it improves their efficiency, profitability.
I bet. It's like they built the operating system for a big chunk of the financial world.
That's a good analogy, yeah.
And they keep updating it, presumably. It's not static tech from the 90s.
Oh, constantly. They invest heavily in AI, machine learning, expanding it to cover newer things like private markets, even digital assets. They bought a company called eFront in 2019, specifically to boost its abilities in alternative investments.
So Aladdin stays cutting edge, helps them move into new areas.
Precisely. It underpins a lot of their ability to grow and adapt.
Which brings us to diversification. They started strong in fixed income, but obviously manage much more now.
Yeah, very deliberate expansion. Equities, cash management, and a really big push into alternatives, private equity, real estate, hedge funds. Clients are looking for different kinds of returns, especially in private markets lately.
And the ETF side, iShares, we touched on that. Why did ETFs take off so much?
Several reasons. Generally, they're lower cost than traditional mutual funds. That's a big one.
Right. Fees matter.
They're also transparent. You can usually see exactly what assets are inside the ETF pretty easily. And they trade like stocks, so they're accessible, easy to buy and sell.
Low cost, transparent, easy to trade. Makes sense.
Yeah, that combination really fueled the ETF thing. And with iShares, BlackRock was perfectly placed to ride that wave. It's been a massive driver of their AUM growth.
Okay, so they've conquered the U.S. market, diversified assets, but they're truly global. How did that international expansion happen? Was it early on?
It was part of the strategy quite early, yes. Today, they've got something like 70 offices in 30 countries, clients in over 100.
Wow. Any key markets they focused on?
They made early moves in places like Japan, China, India through joint ventures and acquisitions.
India and China seem huge opportunities. What are they doing there specifically?
In India, they have a dedicated fund and a big partnership with Geo Financial Services, focusing on digital-first wealth management for that growing market.
Digital first makes sense for India and China.
In China, they got regulatory approval first global player to do so for a wholly owned mutual fund business. So they offer China-focused funds and ETFs. Of course, operating there involves navigating, complex geopolitics.
Naturally. And Europe, other regions.
Very strong in Europe, especially with iShares ETFs holding a leading market share. Elsewhere, they're active in both emerging and developed markets, always adapting their approach to local regulations and investor needs. It's not a one-size-fits-all strategy.
It sounds incredibly complex to manage globally. This whole story, this growth, it feels like there's strong leadership behind it. Larry Fink's name comes up constantly.
Absolutely central. As co-founder, chairman, CEO, his focus on risk from day one, his long-term thinking, his push on stakeholder capitalism more recently, it's all shaped BlackRock profoundly. He's been the driving force.
But not a one-man show, surely.
No.
Who are the other key players, especially early on?
Definitely not. Robert Capito, the president, COO, crucial for operations and culture. Susan Wagner, former COO, was key in M&A and international growth. Barbara Novick handled client relations, public policy, vital relationships. Ben Golub drove risk management culture and BlackRock solutions. It was a really strong, experienced team from the start.
A powerhouse group. Okay, we can't talk about their rise without the 2008 crisis. What was BlackRock's role then? It seems like that period boosted them.
It really did. During the crisis, the Fed and others actually hired BlackRock to analyze and help manage toxic assets from places like Bear Stearns, AIG.
So they were called in to help clean up the mess.
Essentially, yes. Aladdin's risk analysis capabilities were invaluable for figuring out those complex, distressed portfolios. It massively enhanced their reputation for expertise and stability during a time of chaos.
So they came out of the crisis looking very capable, very credible.
Extremely. And the post-crisis world created opportunities. The BGI acquisition in 2009 happened in that context. Plus, investor interest shifted even more towards ETFs and passive strategies after the crisis, which, again, played right into their strengths with iShares.
Right place, right time with the right tools and reputation.
Pretty much. The crisis paradoxically became a springboard for even more growth.
The financial world keeps evolving. What about more recent trends? ESG investing, for example, and just dealing with global regulations.
ESG, environmental, social governance, has become a huge focus for them, partly driven by investor demand, partly by Fink's advocacy. They've launched many ESG-focused funds and actively engage with companies they own on sustainability issues.
So they leaned into that trend.
Very much so. On the regulatory side, well, being global means navigating a complex maze of rules. They're constantly adapting, engaging with regulators worldwide, advocating for policies they see as pro-investor, like transparency. It's a continuous process.
Okay, so summing up the growth story. Risk focus. Aladdin Tech, smart acquisitions like MLM and BGI, diversification, global reach, strong leadership, navigating crises. It leads us to today. $11.6 trillion AUM, end of 2024, record inflows. The momentum seems strong.
The numbers are certainly impressive. Strong revenue, strong income. They're not standing still either.
What are the future plans? Where do they see growth coming from?
Big focus on private markets, things like infrastructure, private credit. They've made acquisitions there like GIP, Prekin Data, planning to buy HPS, continued investment in Aladdin, of course, and further global expansion, especially high-growth markets like India.
So more alternatives, more tech, more global reach. But it's not all smooth sailing, is it? There are criticisms, challenges.
Definitely not smooth sailing. That ESG push we mentioned, it gets significant pushback, especially from some U.S. states. Concerns about prioritizing it over returns, potential fiduciary duty conflicts.
Right, the anti-ESG movement.
Exactly. And their sheer size naturally invites scrutiny. Concerns about too much market power, influence. The shadow bank label pops up. Are they too big? Operating outside traditional bank roles.
And the idea that owning stakes in so many competing companies might reduce competition.
That's the common ownership concern, yeah. Plus, just being so global exposes them to geopolitical risk, trade tensions, instability, particularly in places like China. It's like a constant balancing act.
Huge challenges that come with huge scale. Okay, let's pivot now. Because alongside the business story, there's this whole other dimension, the conspiracy theories surrounding BlackRock.
Given their size and influence, it's maybe not surprising they become a magnet for these kinds of ideas.
When an entity is that big, that involved in the global economy, people start asking questions and sometimes filling in the blanks with, well, theories.
It's almost inevitable, especially today, with how quickly information and misinformation spreads online.
So what are some of the big ones? What are people claiming?
Well, a really common one is just this broad idea that BlackRock secretly controls, well, almost everything. Food prices, gas prices, housing market, you name it.
The pulling all the strings theory.
Exactly. Stemming from that massive financial power, the idea is they manipulate markets for their own hidden agenda.
Okay. Another specific one I hear a lot is about housing, that BlackRock is buying up all the single-family homes.
Right. The claim is they're deliberately buying houses to turn them into rentals, making it impossible for regular people to buy.
Is there any truth to that, or?
Well, they do invest in real estate, including residential properties, as part of their diversified portfolios, but the scale often gets massively exaggerated in these theories. They're not the primary driver of housing affordability issues on a national scale, despite the claims.
Got it. And ESG, which we talked about as a business strategy, that's fertile ground for theories too, you said.
Oh, absolutely. And from different directions, which is interesting. One theory is that they use ESG to push a woke agenda, forcing companies into climate action or diversity initiatives they wouldn't otherwise do.
Okay, the ESG as social engineering angle.
Right. But then you have the flip side. There was that lawsuit from some states claiming BlackRock and others are using ESG to conspire to harm the fossil fuel industry, specifically coal, and drive up energy prices.
The ESG is either a left-wing plot or a conspiracy against traditional energy, depending on who you ask.
Kind of highlights how complex issues get twisted, doesn't it?
Definitely. What about that shadow bank label? How does that feed into conspiracies?
Because they're so large and parts of their business aren't regulated like traditional banks, the theory goes that they operate in the shadows, unaccountable, wielding immense power over the financial system without proper oversight. Unchecked influence.
And political influence, controlling governments.
That's another common theme. Claims that they dictate policy, install friendly officials. Sometimes you see specific, completely false claims attached, like the idea they own Fox News or Dominion voting systems. That one got debunked, but it shows how specific misinformation gets woven in.
Wow, owning Fox and Dominion.
Yeah.
That covered the bases. It really illustrates the misinformation problem.
It does. And some theories go even further, linking BlackRock to, shadowy global elites.
The cabal narrative.
Yes. Sometimes with anti-Semitic undertones, unfortunately, tying them into plots behind things like the COVID pandemic, a supposed COVID agenda. These tap into older, deeper conspiracy tropes.
That's dark territory. And more recently, theories involving Ukraine.
Yeah, there's a pro-Kremlin narrative that paints BlackRock as being behind the conflict, manipulating Ukraine and Europe for financial gain, essentially framing Ukraine's government as puppets of Western finance, led by BlackRock.
Trying to discredit Ukraine's resistance by framing it as corporate manipulation.
Exactly. It shifts the focus from geopolitics to this idea of hidden financial control.
It's striking, looking at all these theories, how they often seize on something real about BlackRock, its size, its ESG focus, its global reach, and then twist it into something sinister.
That's a really key point. The sheer scale, $11 trillion, becomes control over everything.
Yeah.
The ESG statements become a hidden agenda. The global offices become proof of ties to a global cabal. The real facts get distorted and amplified into these narratives.
So we've traced BlackRock's incredible rise risk management, Aladdin, P acquisitions, diversification, global expansion, leadership. We see the scale, the undeniable influence.
A truly significant force in global finance, shaped by strategy, technology, and market events.
And we've also looked at how that very scale and influence makes it a target for conspiracy theories, often fueled by misunderstanding or deliberate misinformation.
The theories, however unfounded, definitely reflect a public grappling with the power concentrated in such large financial institutions. There's a fascination, sometimes an anxiety, about entities that operate on this level.
Right. So for you, our listener, as you process all this, maybe take a moment to think about these huge financial players in our globalized world. It's complex, right? How do we balance their influence with transparency and accountability?
And maybe more broadly, how do we navigate the information landscape, especially online? Being able to critically assess what we read and hear, separating fact from speculation or deliberate falsehoods. That feels more important than ever.
Definitely something to mull over. Thinking critically about information, about power, about how our financial world works. That's the takeaway.